Afternoon, everybody. This is Steve Morrow, Beat the Market Maker, Wednesday presentation, May 11th, 2022. All right, I'm going to get started right away. Typical disclaimer stuff. CFTC 4.41, do not use money you cannot afford to lose. Hypothetical or simulated performance results have certain limitations, unlike actual trading with slippage and broker issues. Anyway, look, my job is to keep you away from this stuff. Try to avoid the pitfalls of the business. I want to welcome everybody in. Got some new guys here. Happy to have you. Hope you're getting along well and learning a lot. We are second week into May. It is now the second third of the 3-month cycle for your 12-week year. So let's take a look where we're at. Okay, we know that this is first third, second third, right there. We are in quarter two. April is done. We are sitting currently right here, May 11th. Okay, last week I encouraged you guys to make some adjustments after doing an assessment on April. You should have taken all the trades that you executed, took your wins and your losses, and came up with some kind of net percent gain on your account. If you made some positive gain and you're not using money management, you should have applied those numbers into the spreadsheet for money management. All right, just grab that thing up, plug it in, and follow the lot sizes that are recommended and count your wins and losses, and you'll see how compounding would have made a much bigger difference in your gains if you're just using straight lot size. It's a big deal. If you're not doing it, you need to be doing it. It's the only thing I can say about it. All right, so look, we're shooting for July 1st, end of the quarter, and we will go into Q3, into the summer, and summer's a little more different type of trading, a lot less people involved, and the markets are sporadic and they don't always get good moves. But you have time, man. You either need to be doing some type of homework, some type of daily routine, or actual trading. And if you're still trading demo, you need to perform a 30 for 30 assessment. What that is, you take 30 trades and you see what your numbers look like. 3 blocks of 10, use them on the spreadsheet. So you take 10 trades, 10 trades, and 10 trades. If you go 8 out of 10, 7 out of 10, right, you'll go 7 out of 10, 8 out of 10, 8 out of 10. 8 times 3 is 24, minus 1 is 23 out of 30. That would be your numbers. You plug these numbers into the spreadsheet, see where you're at. Simple. Carry that forward into June. Might take you about 3 weeks to do it. There's still time. You're supposed to be doing the drills, high-low drill, actual demo trading, and projections. Those are the things that are going to get you moving forward and get you familiar price action. Take 1 or 2 pairs, Euro and GBP, do the high-low drill. And I mean Euro USD and pound dollar. Those are the 2 pairs I'm talking about. Those are usually the best spread given by the broker, and they're pretty consistent in their movements. Easy to figure out. Stay away from the crosses, especially if you're new. When I mean the crosses, I mean Euro GBP, pound Swiss, those kind of pairs. You pay more from the broker to execute in those, and they're more sporadic than the majors. Okay, so I want to talk about process tonight. Talking to some guys in the group, there seems to be a disconnect between writing out your rules and executing and what it's supposed to look like. So the givens, these are the things that you should already possess before you get to your process. You need to show up to a clean workspace in your office environment. Man, I joke around about this, but it's kind of crazy true. If you show up to your desk and you got old chicken bones on there and a plate, or you got empty cans of soda, you have a mess, it's hard to focus on your work if you don't have a clean space. You also need to show up at the same time every day. Listen, I don't care if you're trading Asia, London, or New York. It doesn't matter. But if one session is your session, if Asia is your session, then you need to show up every day at 7 p.m. Eastern time and be ready for the 8:30 open. If London's your time, then you need to be ready for the 3:30, 4 o'clock open. You need to show up at a reasonable amount of time to give yourself a check down or an idea of where the pairs are going, the pairs that you're trading, what kind of news is out in front of you, and how much time you have to execute. You need to stay for the same hours every day. If you trade 1 a.m. to 6 a.m., then you need to show up every single day that you're trading from 1 a.m. to 6 a.m. You need to show up on the same days. You can't trade Sunday some days, Monday some days, skip. You need to get into a rhythm like you would if you were at a regular job. You need to have an execution cutoff. What does that mean? Okay, if it's 5:45 and you leave the office at 6, you probably shouldn't take a trade unless you have other means and the ability to monitor that trade from your phone, your tablet, or some other way. You have to have some time where you will not take another trade. Maybe 5:30, quarter to 6, 7:15, whatever it is, whatever the time is, you have to have a hard rule that I'm not going to open another trade after X. Your trading plan should have been submitted to me, and you got to have some basic rules already established. These are the givens. This is the stuff that I'm assuming that you're past all this. But if you're brand new and you're not, then this is what you need to take care of. Send me pictures of your clean office environment. Send me pictures of your setup, your computer equipment. Let me see what you're doing. Let me see how it's going for you. Establish your basic rules and get them over. All right, so I'm learning that the basic rules aren't so basic. Not everybody's got them. So what does a full working plan look like? I have some really good ones, and I'm going to try to cover one or two tonight. If not, absolutely will be next week. But the problem is a lot of people, I think, may be embarrassed or afraid to send it to me. But I want you to be comfortable in the fact that I will never call you out by name. I'm never going to embarrass you in this group. I haven't done it. I will not begin to do that. It's just not something I'm not that kind of person, man. But if you're one of the people that have done it and are afraid to send it to me, then just send it to me. Just bite the bullet and send it to me. I promise I'm not gonna shred you, man. But in that plan, I'm assuming that people that are developing their process, they have everything included: their office hours, pairs traded, how they handle all aspects of their trades, no matter how the day shapes out. If they have 2 losses, 3 losses, whatever it is, how you're handling yourself and what you're doing. That stuff needs to be written down, like your protocol, your SOPs. One of the most important things that some people are not including in their plan is a loss limit. This is where you have to have a number, a hard number. It's either number of trades, number of pips, or money lost. Maybe it's 3% draw on your account, or it's 3 trades in a row stop out. Has to be some number where you say no more. You push away. And the reason for that is that maybe today's choppy, maybe it's not so great, but tomorrow brings more promise. So if you sit there and burn your account down because you have to win for the day, you're doing yourself a disservice, because you know how this business is. Today could be choppy, tomorrow could be amazing. You can see 50 setups. So if you sit there and keep burning yourself, trying to make something happen to make up for your loss, or to create something that just isn't there because they're in consolidation or there's been a big drop, there has to be some number, some hard rule where you just say, that's it, I'm done. No more today. Okay. You show up in your office, 1 o'clock in the morning. What do you do? What's it look like for you? Are you cleaning the office at 1 o'clock? You should be in the office doing work. So I'll begin every day with a check down as follows. I'm going to check down the higher time frame to the lower time frame. I'm going to look at a daily, a 4 hour, a 1 hour, or a daily and a 1 hour. In this business, in this group together, we use a behavioral pattern recognition system. I trade patterns that are historically profitable for the banks and the brokers, and they're repeated over and over. This is my edge, and this is the edge that I'm sharing with you. This is your edge as well. Do you understand that this is your edge? In order for your edge to be successful, it requires you to execute it under the same rules consistently on the same instruments. If it boiled down to a coin toss, where you're trading 2R or greater, the edge will win every time. So what I'm telling you is that if you're trading with an R value of 2 or greater, and you trade at 50, 55%, that's 5 out of 10, 6 out of 10. The edge is going to come out consistently. I'm telling you that if you trade 50 out of 100 times or 51 out of 100 times, you will have money in your account as long as you're using 2R or greater. You have to understand you're not going to win every single trade. But the goal should be, we've talked about this before, is to win the day in a block of orders of 3 to 5. Okay, I laid these money management models out for you, and they're in the recordings, and I'll cover them again soon. But it basically states that if you are going to trade an instrument, you should execute 3 trades on that instrument, and maybe you go 2 out of 3, 1 out of 3, or 3 out of 3. And you take those numbers and you transpose them into the spreadsheet, and it will give you your gains and your projections of how you should proceed. So if you lose the first trade, if you go 0 for 3 and lose all 3 trades, you're done for the day. If you go 2 for 3, you'll have a successful day. If you go 1 for 3, you might scratch. If you're using 2R, you can afford 2 stop outs on 1 win. 1 win cancels out 2 stop outs. So if you take 3 trades and you go 1 for 3, that's a scratch day. If you lose 2 trades and win 1, you're still even. The numbers work out magnificently, but you just have to not be afraid to work them. Okay. One of the most important things that very few people realize is what you want to call time decay. The longer the session is underway or the longer the trade is on, the less likely or probable the outcome. Okay, as price moves away from peak, each trade in that direction becomes less probable. You have level 2 reversal. If you don't know where you are in the cycle, you have a typical pullback. If you're trading a stop hunt and don't realize it, then after 2 pushes, you might get snagged going the wrong way. So the best time to trade is within the first few hours of the session. That's why, like, an example of this would be the 50 bounce trade. The most probable outcome for the 50 bounce trade is the crossover first touch. Right? If you take the second or third iteration, it still can come out, but the issue is it's not as successful. The setup can work out and you can have a positive expectancy for that, but what happens is if you start taking all 3 of those as your setups, the first, second, and third touch, it's possible that you're not going to have as successful as a run as a first crossover trade. If that was your 3 trades for the day, crossovers on 3 different pairs. So just keep it in mind. Time decay, as the session wears on, you get London Open, stop hunt, right? Stop hunt high, stop hunt low. You get the crossover move, and then the price might find mid-level consolidation as the session wears on. And then going into the 6, 7 o'clock hour Eastern time, the pairs might go sideways holding for the US session. So if you're showing up at 6, 7 o'clock and trying to get something on, it may or may not work out because time decay occurred whether you were there or not. The session has deteriorated towards the end of the session, running out of time. You're fresh, you show up at 7 expecting something and you don't get it. So you start forcing it. You have to keep that in mind. It's very important consideration. All right, so how do we check it down? Let's start with the higher time frame and drill down. Let's take a look. We're going to look at pound dollar. You guys know I'm a fan. So here we are. This is the daily. I like to look at the daily, get a rough idea what's going on. All right, it's very simple to see what's going on here. All right, we have a huge M formation. All right, price moving down. We have a lot of zone flips, a lot of book flips. Right, but here we are. Okay, now, what are the levels that concern me? I want to mark those up and project them forward. So this is how we do that. Right, so the questions you have to ask yourself, right? What's the overall direction? Downside. What areas should I be concerned about? Or is there any harmonic reversals or continuation patterns fired in the last 12 hours since I've been away from the terminal? Okay, so I want to mark that stuff up and transpose it forward on my charts. It should look like this. right? In addition, we know that on the daily chart, this is our anchor, our directional move. We know that something's going on, right? The dollar's gaining strength against other majors, pound, could be the war, could just be time of the year. This is not the first time this has happened. It's a regular occurrence. Okay, we're looking over here for ideas, right? These 3 pins could have been marked, but if you notice that this is where the flips happen. The last swing high flips here, right? This is higher price. Failed buyer's auction, they start coming down. You can draw these lines, all this stuff. You draw boxes on these. Start realizing, right? Here's your, by the way, here's your first touch 50 bounce trade on a daily chart. Epic payout. Okay, so we have a rough idea of areas we want to be concerned about. If you notice, price is laying right on here, and we all know it's in consolidation right now. So we had a huge, massive drop. We had some pullbacks along the way, but the pound is losing value against the dollar. The dollar is gaining, and we're sitting on a level right now. So right off the top of your head, right, we need either for it to break here and go lower, or consolidate, break here and go higher. That's right off the top of my head. Where's it going to go? This would probably be a target unless I miss something over here. Projected out, right? This essentially, these 2 lines would be a zone formed out over here. And notice price retested it perfectly and fell again. So we're here. We got some rejections on the downside, daily rejections, huge lower level trap bars, pins. Okay, I'm kind of liking this to the upside. Right? We know there's a probability that it's going to go higher. Why? Well, you have quite a amount of time of drop. Market's vertical. Vertical markets are a scary thing, right? Vertical markets reverse hard. When the market goes vertical, you get a reversal. And if you take this idea right here and transpose it to this, it's the same thing, right? This is a vertical piece of the pie. It went into a 3-2-1 reversal, right down, vertical, and then back out. Then regular run, vector straight up, reversal, right? When the market gets vertical, they're trapping all the last bit of suckers. All the ones that waited for confirmation to get on, too late of a confirmation, I might say, are finally saying, you know what, maybe the pound is going up, or maybe the pound is going down. I'm going to finally get on board. And that's when you become trapped at the lowest possible level, or the highest possible level. That's the stuff you have to understand. When a market goes vertical, stay away from it. Okay. You buy the consolidation period, it comes after. All right, so we look through here. I wanted you to have a clean chart. We're sitting right here now, right here. And you can see how these pins are fishing. It's essentially sideways. So let's drop down to a lower time frame, get off the dailies, and take a look. All right. So what do we want? H1 chart, we want some kind of anchor and directional move. We want an area where it's possible the high of the day or low of the day might form distance in pips, or something for us to lean on, some kind of zone, right? So we want to find out where the high or low of the day is going to come in. What's the distance in pips that it typically forms? You're trading a pound pair. It's about a 50 pip stop hunt, typically, right? I'll call it, it looks like SOSH, but it's 50, the number 50, and stop hunt. That's typical move for this. Okay, so if we're in a certain level, we're going to take those numbers and add them onto the AR box, right? To get a higher and lower number. What are we going to lean on? What's some type of things we can lean on? Right? Tell me. Blurt it out. Talk to yourself. Tell me. What are things that we can lean on? We can lean on some of those yellow levels I drew. We can lean on a blue tracer, right? In this case, it's red. We could lean on some type of timing element, right? Shadow box. Think of all the things that you have to lean on, right? Why do we call it a Brinks trade? If the high of the day or low of the day is formed inside the shadow right into the session, that's the reason we call it the Brinks trade, because it's a damn near perfect setup. If you have all the elements, right, you have 3 pushes into the high, into a blue tracer, comes out into the shadow box, right at the open. That's something you can get your teeth around. That's something you can pretty much bank on. That's what leaning on something is, right? I marked some of them down, but there's more, right? Blue Tracer, yesterday's high or low, right? If you have a bar that repeats the Blue Tracer, that's a double top. If you have a bar that repeats the bottom of the Blue Tracer, that's a double bottom. If you have a huge pin and pulls the pant leg up and you get a candle like that on the Blue Tracer or slightly bleeds into the tracer and back, that means that they don't want those prices that they had yesterday again. They don't want them. That's a good place to lean on, right? Flip of a zone. It could be they could get through the tracer and retest it. That would be a book flip. You look for the candles to line up with that, which might look like this, and then push through and then look like that, right? Remember, 1, 2, 1, 2. Maybe run the stops on the side of it. That's something you can lean on. AR trade, the 0 or the 50 lines, that's something else you can lean on. You need to know these things. You need to know all the stuff that you can lean on for a reversal. This is not an exhaustive list, but it's a rough idea of the things that we're looking for. I didn't put shadow boxes in here, right? Which would include time of day. The shadows denote the time of day. Distance in pips or distance of pips away from the AR level. The 0 and the 50, straightaway trade. That's the stuff that you need to lean on. All right. Here we are. GBP is in consolidation. And it's not moving very much. This is early Asia right now. What are we expecting? What do we expect here? Okay, just glancing at stuff. We got a couple tracers here. I want you to notice how tight these blue tracers are. They're right on top of each other. Okay, so now we have moving averages expanded down. We have sideways movement for 1, 2, going into 3 days. What are they doing? Consolidating. I said this about 2 weeks ago. They don't consolidate for their health. There's something more going on. You're accumulating at lower levels after a massive drop. The next possible move is to pull back high side. So maybe we're going to get a straight out of the box high, or we're going to get a stop hunt low and then move higher. This would be one of the first targets. Think, what are they going to do? They've been accumulating. Okay, price has been dropping down. Now they're here holding the level for a couple days, and they're wide range swings. You could look at this. This is about 58 pips, right? This is 75 pips. So we know looking at this, it's around 100 pip range. This is 50 pips, stop hunt low. They didn't breach the high. Okay, this is the typical drawing that I draw the funnel and say they're bringing it in, bringing it in, bringing it in, right? Bringing it in, bringing it in, bringing it in, bringing it in. What's going to happen when they spit out the other side? They're going to come straight out of there, or they're going to hit the stops and come out of there. But I can tell you that the point of control is the center of this action, and the point of control is probably right around here. So if they're trading above the point of control right around London, they'll just shoot right out of there at an AR50 type of trade or an AR0 high. That's the trade. Okay. If there is no visible stop hunt, look for an AR50 into higher price, right? First target, yesterday's high, depending how far off we are at the time. And next target would be Mayo. If you get this trade and it doesn't break the level, if you get this trade and fails to break this high swing or yesterday's high, then look for the opposite reversal back across the range. That's it. That's the only plays you got. Right? You can tell, we know the price has been dropping. So in essence, this is a W, a large W. Okay, I got to clean this up. It's driving me crazy. I know it is, you guys too. Okay, look. Vector low, right? Straight vector into the low. They fished below yesterday's low, right? This swing was retested and rejected aggressively. Then they didn't come near it again. So now they have lower level shorts trapped, lower level shorts trapped. Everyone stuck from the drop and that didn't believe it probably shorted in here. So they shifted the zone away. Now they're trading AR mid from yesterday. Okay, so look how this is empty now on the charts. Last couple days, empty. All right, empty now and empty all day yesterday. Okay, so that tells you that they shifted the zone slightly higher. This is blocked now. We're looking at a blocked area right here. So the only possibilities, what could it be? Mild stop hunt, AR type trade, or hit the stops deep and run high. But no matter what, this is the target. Okay, so to be a little more technically correct, you're going to get probably, right, this kind of movement, right? It'll be your 1, 2, 3 type pattern. But you're going to get something here because the moving average is going to come into it. So you're probably going to get a 50 bounce cross, higher price. Target would be the mayonnaise. Easy going to pick up 25 to 50 pips in that float. Okay, so now that's what it's supposed to look like. I think I was going to make this a pop quiz asking you what it can do, but I'm pretty sure I just laid it out. And if you don't know, mark it up, send it to me anyway. All right, take a blank screenshot of that, mark it up. But this is the thing, this is what you're supposed to be doing. When I come in the office and I look at this and I go, okay, the daily's been dropping, price has been going down. I don't really have to look at those charts, but I just take a quick peek at them. But I know that we're overextended just by looking at the last couple days of drop and then consolidation. It's the same exact thing. I mentioned this 2 weeks ago. They don't consolidate for their health. They're balancing their books to see what's going on and where things are at. They have to do it. They can't afford to just keep pouring out money and taking the opposite sides of everyone's position. They got to punish. And they punish big, man. So now they're tightening up, right? Bring it in, bring it in, bring it in. You can see that. Look, the wide swings here and here, and then staying off the level. It's blocked. When they block and shift higher, you could just imagine in your mind that the point of control is somewhere around here and that they're going to get above that point of control and trade back into the range, right? And the point of control will shift down each day. The point of control would become here. So that kind of lines up with an AR50 or an AR0 long. That's what you're looking for. Just imagine all this volume and notice that the most time is spent in the middle of the range. That is where the point of control is. Point of control is based on time and price. It's the most active area, whether it's consolidation or not. It's the most active area of accumulation that forms out these high volume exchanges, right? I mean, if you really start looking at it, buyers, sellers, neutral, buyers, sellers, sellers, buyers, bunch of sells, trap lower, buy, one big seller, right? Probably on low volume, you can't see because it's red. Probably on low volume, right? Buyer, seller, even. Couple buyers, push back sellers, even money, right? That's an even exchange right there. But this is inducement, right? Some people see flat print, go short, but you got to look at the tracer. In order for this to work, you need higher price like that. In order for this to work, you need lower price like this. And you got to get outside the range. You got to get outside the range, right? The next day, the range readjusts. Now we're tight. Look how tight that Asian range is. It was 50. Now it's in the 20s. This was 75, 47. This is a huge move for Asia. Now look at this. Look at these tracers. Look how tight those tracers are. This is all clues, stuff you're supposed to be looking at. There's the 50 right in the middle, intertwining with coming into the AR numbers. This is the kind of stuff that you have to be paying attention to. This should be part of your process. That's why I highly recommend 1 or 2 pairs max and get very familiar with this type of behavior and notice the tracers. Look over here at the tracer. Look at that. This tracer came in and just all of a sudden started flat printing. So literally price fell off of a cliff the last several days, and this tracer came in and tightened it up. right? Wide range swings followed by tighter and tighter winding up of the price. It's going to be a spring, man. It's going to explode to the downside or explode to the upside. That's the only choices. But you can guess that if price has been dropping, you're probably going to accumulate and go back into the range, right? That's how you get this in a chart. This and this is the result of the accumulation after a big drop, right? So we're here right now. We're expecting that. Then you can start looking at those yellow lines from the higher swings as a target. If it hits the mayonnaise clean and you don't want to get out, then look for a break above the mayonnaise, pushing into higher price. That's the only way to figure it and calculate it. Okay, and look for the setup. We know that euro dollar and pound dollar trade very similarly. So if you miss it on this pair, look for it in its counterpart. That's how you get a setup. That's your process. This is what you're supposed to be doing. And of course, you got to check for news releases, the basic stuff that, like I said, part of the Gibbons. I didn't mention that, but I wanted to make sure I covered it. You need to come in and know what kind of news is on the table. What are you up against today? Do you got a clean playing field out in front of you? No wrenches. No one throwing a monkey wrench at you. That's the kind of stuff you need to make sure. Fly in your ointment, whatever it is, whatever the saying you like. Okay, so that's basically how you check down a process. Right? Bring all your lines in. You have your tracers in. Bring all your lines in. You're sitting here right now. Make some projections for me. Send me something and go, hey, Steve, this is what I like today. And I project this going out to here, turning a little bit and meeting price at right around here. Drag this over and see where it is on the price bar. And that's going to be your target number. Right? You can make these projections. We know that how the moving averages behave. We know that this 50 is going to flat and then turn up and follow price behind it. So this would also give you an opportunity for a 50 bounce crossover here, right? Maybe right around this level or maybe at yesterday's high. You have to see how it turns. If price turns very aggressively, then the average will go straight up. And this one will start to flat out sooner, and that will give you a higher target at the ADR range, at the projected ADR number. We know those numbers haven't locked in yet. They'll start to move. As price moves, the bottom will pull up and probably rest here, and then you'll give you the full range projection out here somewhere. Right now, this indicator straddles price until we get an overextended move. Then it basically drags the bottom up at the low and projects the high when you get closer. You guys know how it works. All right, so that's the process. And if you don't have a clean process, then I'm failing you. You need to have a clean office, a clean set of rules, and a process that you can live with every single day, and it's repeatable. That's where the edge comes in. If you're not repeating yourself over and over and over again, the same type of behavior, you're giving your edge back to the house. And we know the house is the bank, the market makers. Don't turn over your power. Your power is in your discipline, your knowledge, and your execution of those two things. How do you execute your knowledge and how do you maintain your discipline? That's the problem everybody has. There's guys that are doing fantastic and they blow themselves up in one day. When I say blow up, I mean zero, margin call, lose it all. And I don't understand that. You need to have a hard set limit of 3 trades a day or 3 stop outs a day, whatever it is. You need to have those rules in place, and you need to put a yellow sticky on your computer, or that's why I talked about if there was a platform that would shut you down after you had some kind of loss limit. And I heard there's some version of something like that out there, but I have different ideas for it, but I know it'll never fly. So what happens? Platform doesn't exist, but your brain exists, and you got to be that person. You got to be the guy that says, you know what? Today was tough trading, man. It's Wednesday, but I got Thursday and Friday. I'm going to take my 3 stop outs of 10 pips, be down minus 30 for the day, and I'm going to come back and I'll hit 35 tomorrow, maybe twice. I'll be up plus 35 after I get my money back. That's how you look at it. That's how the numbers flesh out. That's the way you make money in the business. You don't have to be the best trader, but you have to maintain control and calm in your demeanor. And when the market's not playing your way or how you think, then you need to stand down for the day. That's going to make you successful and give you long-term run in the business. All right. Those are what I had for the pop quiz, but I got way ahead of myself. So that's it, right? Stop hunt low rise, stop hunt high drop, straight away up, straight away down. The trap, right? But looking at this right here, this should be a clue. This is a clue that we expect higher price. Right? So this is no bueno. This is, I think, this. When you get this block zone right here, you have to anticipate that you got lower level shorts trapped hard, right? They fished in there and then they shifted away and they stayed out of it. So now this is basically a zone flip higher, and the zone is holding for a couple days. It's probably going to break high, right? The clues are overextended moving averages, a massive blue tracer straight vertical. That's a vertical blue tracer if I've ever seen one, right? That means the tracer came down from heaven and then turned flat. And you could basically draw these tracers into a box and you would have price pretty much boxed in. And then you got lower level box X'd out, lower level shorts are trapped, right? Big trap here. They stayed low for hours, right? People were expecting the continuation. They piled on in Asia and they piled on here and into going into London, and then they got snagged. Maybe they sold here or the worst possible place on the close of this candle. Now they're sitting at break even or less with the spread, hoping for something, and I expect it to come straight out of there and kill it. Okay. All right, so checking a chart or instrument down gives you the general idea of what you're expecting it to do. Are you going to be right every time? Of course, you are not. It's impossible. But if it acts against the idea, you should pass on the trade in that particular pair. But if the pair exhibits clear behavior that is telling you of its next move, then execute based on a working knowledge and prior experience. I just told you this 2 weeks ago, that GBP did some consolidation. They're not consolidating for their health. Go back and listen to it. I said it's the exact same thing. If it doesn't do what you expect it to do, then stand down. Stay away from it. There's always another trade, but there's not always more capital in your account, and there's not always another shot if you're in a combine and you blow it over this. Right? I can't tell you how many people said they were one trade away from the combine and they blew it, and they blew themselves up because once they hit that loss, they need, and it wasn't their max loss, but they kept going and going and going for the day, and they violated themselves. They violated the max loss draw for the day, and they blew their combine up, wasted $1,000, $1,500, whatever it is for the higher amount. That's how you avoid this stuff, by having rules in place and a process in place. A lot of you guys work in IT, a lot of you guys work at a regular job outside of this, and I guarantee you don't show up over there and just wander around, start clicking the mouse at someone's desk. It's not even yours. It doesn't work like that. So why should this be any different? Because you have free reign. You have to govern yourself through process, through rule generation, and through trading hours and things that I've been talking about, a clean workspace. When you go to work at your office, at your job, is there chicken bones on there? Is there candy wrappers? Is there old Diet Coke cans? There's not on my desk either, by the way. By the end of the session there is, but I dump them all every night. When I leave the office, I clean up after myself. I do not have junk on my desk. I wipe it down, I dust it. I annoy my wife, I think, sometimes. But the problem is that I like a clean workspace so I could think. I have a whiteboard. You guys have seen it. I mark directional bias on there, what I'm thinking, and I mark the charts up just like I showed you. Make projections. All right. If the pair exhibits clear behavior that is telling you of its next move, then execute based on a working knowledge. I'm giving you the same working knowledge that we took 2 weeks ago and made the projection. Big drop, consolidation, shift the zone off the lows, price is going to come out of there and go higher. Will there be a stop hunt first? I don't know. But I'm be prepared to execute. If it gets above the Asian numbers and prints a mini W, I'm looking to get long on the second leg of that W. Visible on a 5 or 15-minute chart. If not, I'm going to stand aside on this pair tonight. There's always going to be another trade. I've been in the business 23 years. Guess how many trades there have been? There's always been another one tomorrow and the next day and the next day and the next day. If there wasn't, I wouldn't be here anymore. I would have to find something more lucrative, right? You're in the most lucrative business in the world with no rules. Think about that. You can easily lose 10, 20, 30, 50,000. You can burn a combine account easily because it's so liquid, the money is there. If there's not enough liquidity in one instrument, you jump over to another one. Someone's always willing to take the other side of your trade, whether it's a dealer or they match you with that fair price matching bullshit that they tell you that they match you with another trader. Please. There's always somebody out there willing to take your money. You just have to be smart about it, and that starts with having a process and a set of rules. All right, so here's your homework, man. Here's your drill. Just like the quiz last week, or the quiz I was supposed to give you a few minutes ago, mark up the projections on pairs that you trade. See if it comes true. That's it. Just start marking this stuff. It's part of the drill that helps you become good at price action and making projections. If you can make solid projections and make 3 or 4 good executions off those projections, you'll start making money in the business. It's that simple. It should look like this. You should go through your pairs, right? Let's say you got, I don't know, 4 screens going and you're trading GU and you have your 1 hour and you have your 15-minute and you have EU, right? And you have your 1 hour and your 15-minute, but you like to execute on the 5, that's okay. Okay, so what do? You just mark the 1 hour like I should. Take a look at the daily, get a rough idea, man, the bottoms are falling out of these pairs. I don't, where could it possibly go? Right, look at the 1 hour, look for 4-hour harmonics, just to give you an idea if there's a reversal in play, something that you can lean on. You're looking for things to lean on. Then drill down to the 15 or 5 and make it happen. Make the projections, take the pair, say, okay, tomorrow, I like it coming out of here, give me a stop hunt low rise. I expect it to stall at the AR50, break above the blue tracer, and give me a plus 50. That's a projection. That's something you can get your head around. You can use the stop hunt box. Click it on, it's in your template. And you could say, okay, I'm going to execute along if I get a clean stop hunt. If it misses and comes straight out and goes straight away, I'm going to try to get a retest into an AR number, top side, or maybe find the place where the 50 and the AR numbers cross. That'll give you an edge to lean on. You need something to lean on to take the trade, and that's it. This is what your trade plan would be. If you're looking at 1 or 2 pairs, you do this for both instruments and you make a projection. The projection could be unidirectional. It doesn't have to be one direction. Let me see if I can erase this now. Okay, so you can take GU coming out of Asia, right, at 1 a.m., and you could say, okay, if it does this, right, if it gives me a 1-2 micro M coming down and fails to get above the AR0 high, then I like to sell it as it breaks below the AR0 low. So this would be the 0 low, this would be the 0 high, right? And you have your AR number in the middle. So if I get some type of formation, maybe it flips here and retests, or maybe it gives me a nice flip here and retests into the blue tracer and the AR number. That would be a zone, right? You can box this off. How about you extend the day open, right, in the AR box at the 50 line. So if you get an open and a 50, remember I told you this becomes a zone. Draw a box over it, right? Maybe you get Jim's holding one setup where it pushes through, but you also use the AR50 and the blue tracer or the day open price tracer. That's something you can lean on. You're just looking for something to lean on to give you a reason to pull. That's all it is. That's all that planning is giving you some idea. And then, say, hey, you know what? I like it down. I like it up. Just get a yellow sticky and put a big arrow on the screen that contains GU. If you like GU long today, put a big arrow with a Sharpie up. Maybe use green. Maybe use red for your downside stuff. Just whatever it is. The stuff's inexpensive, man. Those stupid Post-it notes and a pack of Sharpies, less than $10 for all of it. Right? And just paste it on the screen that has GU. I like upside. Place it on the screen that has Swissy, I like it downside. If you're trading Australian, I like it upside. Whatever it is. But you have to make some plans and some projections, and then take the chart and stretch out the gray space on the side and draw what you think it's going to do and how it's going to look, and project the averages moving forward. Give yourself the thought process. That's why I tell you the difference between a flashcard and a markup. A flashcard gives you the gray space to make the projection on this side here, to see how it would play out in your mind. And the idea of doing those flashcards is for you to say, man, when I see this pattern, it's going to do this, and it's going to curve, and the prices are going to cross the 50 average, and it's going to turn up. Those are the things you're projecting. And then a lot of times it'll start coming true for yourself. Then you're right on the door of making big money. If you can project it 7 out of 10, 8 out of 10 times in the course of a week, that means you would have went 7 for 10 plus 50. 7 times 5 is 350 pips and 3 losses. If your losses are 20, that's minus 60. You're in a good place, man. Do the math. Add money management and compounding. That's a business. And it's something that's sustainable. A lot of you guys are bouncing around, changing the rules, and you can't find your spot. You got to identify with me or Jim or Carr and find your spot and make it work. Carr has all the rules laid out. I've tried to lay the rules out for you, but it's a lot of you don't want to use limit orders, and I understand, but you could take the same trades, maybe waiting for a hammer or a rejection type close on a bar. Go back and do the work. Once you do the work, I promise you, things will start to clear up. The biggest problem is not doing the homework, not doing the projections, out of fear, out of embarrassment, wondering if I'm going to insult you or hurt your feelings. And you got to get your feelings hurt in business. That's just life. And I promise you, the people that have written to me, I haven't hurt their feelings. I don't think I have anyway. Half of them don't talk to me anymore. No, I'm kidding. But seriously, send me something. Send me some projections. Don't be afraid. Team up with somebody in the room and send each other your projections. Maybe you take 2 pairs, he takes 2 pairs, and you make projections and change them out. Maybe that's less intimidating for someone that's a trading partner. I can get my head around that. I just want you to do it. The thing is, I told you this, guys, 100 times. I'm going to tell you one more time now before I end this session tonight. When I was training, I could not move forward until I turned in the homework. I can't do that. I would still be stuck on what's a candle with you guys. You guys are afraid to send me something, and I'm not an intimidating guy. I'm really a nice guy. Maybe, I don't know. That's my wife. I think she likes me all right. The people that met me in person, and when I used to do the classes live in person, I have more of a relationship with those guys, the guys that have been around a long time. A lot of those guys are having success. A lot of them went on to bigger things. I'm proud of that. But we have a new group of people, a new dynamic where people are qualifying for money, and I'm very proud of that. They're qualifying for massive accounts and have the opportunity to make 10, 20% a week and change their lives and their family's life forever. But it all starts with doing some projections and rolling up your sleeves, man. If you're afraid to send me something, find somebody in the group you can work with and make something happen for yourself. Good night.